Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me today is Steve Levely. He's the CEO of Ackroo Inc. It's a publicly traded company. I got two symbols for you, AKR on the TSX Venture and AKRFF on the OTC. And Ackroo will be presenting at our upcoming investor conference, the Planet MicroCap Showcase Vancouver, taking place September 6th and 7th, 2023. For more information, to see Steve's presentation and join us in person, please visit planetmicrocapshowcase.com. And with that, Steve, thank you for joining me today. How you doing, man?
I'm good, Robert. How are you?
We are excited to have you there and present to see your whole thing. Actually, you're doing a Q&A with Harold Leachman from Canaccord, so that's going to be really cool.
I am. It's actually my first time in 3 years doing anything in person. Right? We haven't really done much of anything since right before COVID, so it's an interesting time to be in the investor relations community for the first time in over 3 years. So yeah, I'm looking forward to it.
Very cool. All right. So for those that, we've done a couple interviews in the past, so for those that haven't seen any of those, can you give us that quick overview of the company and then we'll do a quick update?
Sure. Ackroo, we're a consolidator into the gift, loyalty, payment, and point of sale space. So we acquire businesses that, in the gift card and loyalty processing space, point of sale and payment side of the business. But we don't just buy the businesses, we operate them. So we take those companies, we integrate them into our core products. So there's a big normalization play. So we, again, consolidate vendors and competitors within our industry across those three business types: marketing, point of sale, and payments.
Very good. All right. So last time we talked, we put that interview out on November 11, 2021. In that interview, you talked about the pivot to the point of sale, opening new verticals in the automobile and golf verticals. So love to get that update. How is the pivot going? How are these new verticals selling into them? Love to hear the full thing.
Yeah. If you think like our backstory, traditionally we were a marketing business, right? Selling gift and loyalty. That was our main business. We would partner with the payment and point of sale providers of the world to bring us into their clientele. Payment was the second thing that we did, and we were still doing really great work there. But yeah, point of sale was the big pivot we were taking. We bought our first point of sale system, which was a golf course point of sale. It's called GGGolf. And we later bought a point of sale called IDMS for automotive. It didn't play out well for us. So that acquisition of GGGolf, our theory was at Ackroo, a golf course has a restaurant, has a pro shop. So there's hospitality and retail, two verticals we play well in already, with our marketing product and our payments products. Made sense, but in practice it didn't play out that way. Having to rebuild that technology because it was an old legacy tech, and having to actually expand it across not just golf but across our whole client base, it wasn't an easy thing for us to do. So we actually divested of that asset. And so it's actually our first divestiture. And so Q1 of this year, we divested of the GGGolf point of sale system because it wasn't able to really commercialize in a big way. We had a small return, paid 1.8, made about $500,000 on it, sold it for 1.6. So not a big return, small return, but we got a big return, but lots of learnings around the pivot to point of sale. So what we've learned with point of sale is it wasn't as simple for our business that we're really strong in the marketing and payment side of things. So we're actually stepping back from trying to pivot fully into point of sale. We still have the interactive DMS product, which is for automotive dealerships. But once again, it's used card in the US and it's an old tech, hard to rebuild. So similar to the struggles we have at GGGolf, we're also still having that with the automotive point of sale. So we're kind of reverting back to our roots and saying what we know and we do well is this gift and loyalty and payment side of our business. So that's where we're putting a lot of our energies and our efforts, just sustaining the one point of sale. So this is an example of a pivot attempt. Didn't play out, so we were smart. We tried our best, divested, and we're going right back to our core business again.
What would you say was the main driver for why the point of sale didn't really work? I know you mentioned old tech and having to redo all that stuff, but yeah, is there some kind of macro trend here that maybe you didn't foresee or didn't expect?
Yeah, so some of the gotchas for me was not only was it built in an old technology, but the owner itself became the centerpiece of that business, where as the centerpiece of that business, when it came to support it, like the whole point when they sold it was for him to retire and move on. We had to keep paying him consulting fees, pull him back into the business. A lot of times when people build software companies, they build it around themselves, right? And he had every client had a different custom version of the product. And that's kind of what happens when you're small. Eventually you have to kind of re-architect it. And it was due to be rebuilt and re-architected, which we weren't prepared or interested in doing. We didn't want to start over. So the combination of the owner really being built around because who we sold it back to was the owner again, and a conglomerate around him. So we actually just sold it right back to the owner himself. So it's an example of like one of the things that we typically do is we buy a business. The owners usually don't come along for the ride. We take it over, we run it our way, but we couldn't run it without the owner easily anyhow. And so between that, having to rebuild the technology and just the industry itself, it wasn't an easy one to support. It was very service heavy, not tech heavy, where we're a very tech first, services second company. There was a mismatch.
Got it. All right, cool. I mean, it sounds like, okay, you tried it, you recognize it.
Yeah.
Now we're
and
moving
you
on.
adjust. Yeah.
Cool. All right. So we're getting back to our roots. So tell us a little bit about, where the company is at currently today. And, again, from what you can tell us, what are some of the catalysts to now see growth on that side of the business?
Yeah. So recognizing that, we had bought all these gift loyalty businesses for a bunch of years, and then we went and bought a payments company, and that's been okay. And the growth is getting better there now. And then we bought a couple point of sale companies in a row, and we realized that wasn't great for us. So at the end of last year, we said, let's stop buying point of sales and trying to execute there. Let's go back to our roots. So in January of this year, we bought a gift loyalty company again. And they were loyalty specifically into the gas station convenience or petroleum segment in the US. So our most recent acquisition in January was they provide loyalty programs for gas stations all over the US market, right back in our old sweet spot. So it's us now buying back into what we knew before. But what was kind of cool about us doing that is not only we're familiar with it, there's US expansion, but they also play into what's called brand loyalty. So, think about, getting rebates and stuff for what you buy. So the actual rebates the merchants are getting from certain brands is paying for our software. So the software itself is effectively paid for through the brand rebates and stuff. So there's an interesting twist on the product that they had across this convenience petroleum sector that we've done really well in Canada. So great to see us expand into the US. So it's an example of, okay, from an acquisition standpoint, we're going to go back to where we had earlier success and just sort of, not keep buying to point of sale.
Very good. All right. Yeah. So with Steve, I think we're there. I think that's the full, what goes on. I think people should now come to Vancouver and hear the full update. So with that, where can our audience go and find more information on Ackroo?
So you go to our website at ackroo.com, AKROO.com. It's pronounced Ackroo, but it's spelt funny on purpose. But yeah, go to our website. There's an investor page there, and there's a drop down. There's even videos of me going through our most recent investor decks and what have you. So there's information right there for them.
Very good. All right. Well, Steve, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I'll see you in Vancouver.
Awesome. See you in a few weeks.
Thank you.